So today we'll be talking about the math behind Dubai real estate. We'll be talking from the point of view if you're a resident in UAE, if you're an outside investor, and about off-plan properties. We'll also be comparing the numbers to India, the US and UK. US and UK have similar numbers, so I've clubbed that into one category. All properties, we have taken 1 million as the price to avoid any currency fluctuations. But just in case you're watching this from India, in the last 5 years, INR has depreciated more than 20% against the dollar. The dollar is what the UAE dirham is pegged against as well. So that means how much ever dollar moves, the UAE dirham moves as well. Let's start off with the first category, that is ready property for a resident. Now, if you're a resident here, you're paying about 7.5% of the price of a place as rent. So for a 1 million house, you're paying about 75K as rent. A lot of residents think, okay, why not just buy my own house and pay the EMI instead of the rent? Does the math make sense in that case? A lot of people think, okay, let me just get a studio apartment. I'll stay in a 2 BHK, I'll get a studio apartment and I'll get the rental yields. So let's just get down to the numbers. So for a 1 million house, you're always buying on leverage, okay? If you're a resident here, getting a loan is very easy. You just have to pay 20% as the down payment for the house. So for 1 million, you pay 200K as the down payment. There's a 4% DLD, which is the amount you give to the government. That is around 40,000. I've added another 1% for furnishing and things like that. So around 250,000 is what you will pay in one go. Now, loans range to up to 25 years and the percentage is 3.99% typically, 4% typically. So your EMI will come to about 4,200 dirhams for, in this case. Now, here's where it gets very interesting. The rent, as I said, was around 75K, right? So that is more than 6,000K every month. So there is a huge difference. Your EMI is lesser than the rent you pay. Now, a lot of brokers in Dubai will tell you, hey, I'll get you 7.5%, 8% return, but that is not the case. You do have maintenance. If you're owning a property, the owner has to take care of the maintenance, which is about 10 to 30% depending on what building you get. Now, the actual rental yield would be around 6.5%. So if you buy a property for 1 million and you put it on rent, you would be expecting net about 65,000 in hand. What we'll be doing would be a 5-year horizon, okay, to compare the numbers that you'll get, the returns that you'll get after 5 years. The rent is 5,400, the EMI is 4,200, that's a 1,200 difference. That is around 14.4K that you'll get extra each year. Across a 5-year horizon, that's 72K. Okay, so you have already gotten 72K at the end of 5 years. Now let's come to the appreciation of the property. If you invest well, you can expect a 6% return in Dubai. So 6% across a 5-year period is about a 34% appreciation. So your 1 million house has become a 1.34 million house already. Now let's come down to the final numbers. You have paid 250K, the down payment plus a little extra. You have gotten 72K plus the 340K. So yeah, at the end of 5 years, you've gotten about 340K from the appreciation itself. You've gotten about 72K from the rent. The total that you have gained is 410K. Now remember, your initial investment was just 250K. Your EMI is lesser than your rent, so you're not paying anything after that. 410 across 5 years on an investment of 250K, that's a 160% appreciation. If you go and calculate the CAGR, which is the average return every year, that is around 21%. That's a crazy number for a safe asset. Even if the property appreciates by just maybe 3-4%, you will make a lot of money, about 15-16% CAGR every year. And that is why you have a lot of residents in Dubai actually buying property here. Now let's compare the numbers to India. The loan is more or less similar when it comes to the down payment that you have to pay, which is 20%. But the percentage, the cost of borrowing is very high. It's 7.5% in India. The rental yield is very low. It's around 2.5% in India. So with this calculation, the EMI of loan comes to about 5,900 and the rental yield is just 2,100. You are losing money each month. You're paying the bank money each month. Had you spent that money somewhere else, you'd make more money. So I'm not taking that into the calculations here. We are just trying to think 5 years down the lane. Now, the capital appreciation that you can expect in India, yes, there are parts in Gurgaon, Pune, Bangalore, where you can expect a lot more appreciation. So let's take that as 6% as well. Even with all that, the final number that you come up with in a span of 5 years is about 108k return on your initial investment. So 108k from a 250k investment. That is about 43% across 5 years, or about 7.5% CAGR across the 5 years. So yeah, that is why it is difficult to buy homes in India, especially from an investment point of view. It does not make you money. Like there are FDs that might give you better returns in India, even if it is leveraged. Now coming to the likes of UK and US, I took rough numbers from London and New York. The difference, there isn't a lot of difference when it comes to the loan percentage. It is around 4.5%. The rental yield is slightly better than India, but it is at 4%, still lesser than Dubai. Where the major difference is the appreciation that is expected. In these places, because these are already developed places, you are not expecting more than 3% appreciation. So when it comes down to the final number, this makes no sense to buy properties in the US or UK right now. Now this brings us to the next section of if you're buying a ready property and you're staying outside UAE, outside Dubai. You can buy properties from India, UK, US. A lot of people are doing that right now. In fact, there are more millionaires going into Dubai, such a small city, as compared to USA. So it's crazy right now, the amount of Europeans, US and Indians who are moving to Dubai, not just investing in Dubai. Anyway, Dubai has an option of outside investment where you can get a loan as well. You just have to pay 50% down payment and you can get the remaining 50% at the same 4% interest. So especially if you're coming from India, instead of a 7.5, you will pay 4% here. Now the CAGR of that with the entire calculation, I've given the table, the entire calculation would come to about 13.9%. That is also pretty crazy. In India, you get an FD at 4%, everywhere 5-6% maybe. Everywhere else it's 2-3%. It's beating all those numbers. At a 13.9, you're beating the Nifty 50 as well. So it's crazy return when it comes to that. Even if the house doesn't appreciate a lot, you will still make a lot of money. By the way, if you're an investor and this video made you go gaga, I have my LinkedIn on this video. Do connect with me on LinkedIn and we'll get you your move to Dubai or your investment to Dubai. Anyway, so in a ready property, if you're investing from outside, you're still making a lot of money. This brings us to the next section of off-plan properties. Now, that is where big money is. You have off-plans, like I know for the calculations I've taken 1 million, but off-plan properties are like 10 million, 15 million. They have beautiful villas and whatnot, and you make a lot of money in there. You've heard about the Palm, how much it has appreciated in the last few years. They have the Palm Jabal Ali coming in. It's going to go crazy as well. A lot of people do want to shift to Dubai, so the prices of off-plan are crazy. Now, here's a caveat though. Moody's and Fitch, they both released reports saying that the Dubai market will correct. It will correct. It is already correcting. We are seeing a lot of places where the property prices are coming down, but majority of the correction is in the apartments area. The townhouses and villas, there's still a lot of dearth of townhouses and villas in Dubai. So those are holding its value and appreciating as well year on year. So anyway, when you're buying off-plan properties, you have a 50-50 plan typically. You have to give the 50% down payment if you're a resident or if you're from outside. Anyone can buy the property. Even for residents, there is not a better plan, so as to say. But what happens is the 6% that I told you that the property is appreciating each year, that appreciates about 8 to 12% every year. Now at 10% across a 5-year horizon, your property has already appreciated by 60%. You're not getting any rent, but the property has appreciated by 60%. And remember, you've paid only 50% of the property price. A lot of people, once the property is ready, they just flip it. So because it's a 1:2 leverage, you get 120% return. That is a 17% CAGR when it comes to off-plan. Now there are off-plan communities that are crazy. Like I've come across communities with like 20 kilometers of cycling tracks and like huge infinite pools, and like it's like a small city in a city itself. You want water in Dubai, they will put water in Dubai. You want a golf course, they give you a golf course. So off-plan properties has a lot of options. Now, I've been looking at the Dubai map, the Dubai real estate map very closely in the past few weeks. And I think they have made only 20% of Dubai right now. The rest, 80%, is still getting ready. So there is a lot of opportunity there. So if you're an investment looking into that, that is a place where you should be investing your money at. All right. Thank you. Bye-bye.